Hello and welcome to the Stock Planner channel. Came across this article on Teladoc Health, ticker TDOC, and it said revenues are not doing enough for some investors. Revenues, that's the money you're bringing in. They're not selling enough. Sparked my interest, and so this video will do some analysis on the stock, which is fundamental analysis. Then we'll look at the chart and then see if there's any chance of making an option play short term to capture some of the pessimism of this stock. Let's get started. Remember to do your own due diligence, learn it, and win. Ticker symbol TDOC is trading at $23.74. $23.74. A relatively cheap company. It's not a small company. In the last 7 days, it lost around 5%, and over the year, it's lost 36%. This was a favorite stock about a year and a half ago. Teladoc Health provides healthcare services in the United States and internationally, and it's primarily focused on remote treatment, video, visuals, software, and it does a lot of software type automation type activities that you normally would have to go to a doctor's office. It's undervalued by 28%. The revenue, the amount of money you're taking in, is expected to grow 7.65%, about 8%. We need to do a little more analysis on that. It says it's trading amongst its peers, and generally, all the analysts think it's going to go up by 28%. Well, why is the chart going down? Why is the stock going down from a high of July 2022 of $35? Now it's in the 20s. Chief Innovation Officer and Chief Financial Officer sold shares. That's not good. This is a snowflake, and you want it to be big and green and fill out all these areas. But the areas that this has filled out is it's a healthy company, fairly healthy, and it's undervalued. And you can see this valuation, all the check marks, the criteria. They have 6 areas that they look at, and they're all checked as being a good metric, showing that this stock is a good value. Unprofitable, so they're using the price to sales ratio and they compare it with the peers. There's Teladoc, and it's tremendous value amongst its peers. And I can't say that I know these companies that well. The price to sales ratio is dropping. I think it's supposed to go up. According to the free cash flow model, the current price is $23.74, and it should be trading at $32.94. There's some room there to grow. And the strategy is, if you find an undervalued stock that's good stock on a growing company that's undervalued, eventually people will find out about it, and the price will gradually grow into this. And this is the analyst price targets, and that looks like it's going down. Not much movement here. 31.08 is the average price target. I think this chart's supposed to go up. Not a good look. Revenues and earnings. That looks like a flat line to me. Upward trend for revenues, but not. It should grow faster. Still, the analysts that know, that are getting paid to do the analysis on this, went to college for this stuff, they're saying this future growth of this company is 132% versus the industry. I guess that's why a lot of people are betting on this stock. The financial position of this company, well, you want more assets than liabilities. That's cool. Same with long term. Just got to make a profit. Recent insider transactions are all sells. Nothing's being bought. Again, that's not good. Institutions own 80% of this stock. Let's look at a trading view chart of this. I'm a swing trader, and I look for the bottoms and tops of the market and then take the trend in between. And if I can pick those tops and bottoms and then capture 80% of that trend in between, I believe I can make some money. This is a zigzag indicator. It's not an indicator at all. It waits to paint these solid lines until it has new data. It looks for future, and then it repaints itself. So you really can't. All you can use it as a model to find other indicators that don't repaint themselves, like the MACD, the stochastics, and the RSI. And so you want to find indicators that will predict maybe this peak. And here's the MACD crossover, and we had a stochastic come back around, and the oversold and come back around, and the RSI. And I like it when they all three occur within a couple days of each other, and that gives me an indication that it might be going up. What do we have now? We have a downward trend for the MACD, the stochastics, It says down, and the RSI is pointing down. And that's what's saying the last couple of days the stock should go down, and it looks like that's what it's doing. But this is a relatively cheap stock, and it moves kind of slow. And it spends a lot of time in this area. So if I can find something within about 25 and 21 or 22, out about a month, I might have a chance of winning this thing. And you don't want to go ahead and go much beyond earnings. Earnings are occurring in the 26th of July. So I go to a tool called Option Strat. It's free to use. It's pretty robust. It's an option simulating tool. And I type in the symbol. The target price is automatically put there. But I can change it. And how much I want to spend for the trade. In other words, I don't want to risk any more than $500 of my margin account. I hit enter and it gives me these options. And since I want to have a range between a top and a bottom, I normally do credit spreads, and these Iron Butterfly and Iron Condor are credit spreads. This has unlimited risk, and so does this. So I'd stay away from these because it can get away from you, and I don't have a large enough account to handle a big bust. Well, nobody does. So we can open this and see where we're at. It says 21.53 and 25.47. That's close enough for government work there. And I'll get $97 in my pocket immediately. And that's cool. It's a 1-for-1, basically. I can lose about $200 and lose about $100. And that's the max I have to put on margin is $200. This plus this is, that's what I have to put margin hold. You're not really using margin, you're just putting it on hold in case you got to. The max profit is 97. So to do this, you have to sell a put and buy a call. That's good. Sell and sell a put, sell a call, and buy a call and buy a put. Sell a 22.50 put and buy a 20 for protection. Sell a 24.50 for money and buy 26.50 for protection. The distance between these are $2. $2 times 100 is $200, and that's how you calculate the max loss and profit. This is your playing field, and as long as it stays in between these two ranges, we have a winner on our hands. Let's take a look at the TradingView chart one more time. 21.53, that's close enough for government work right there. I worked for the government at one time. And 25.47, again, that's close enough. And there's no telling whether this is going to go down or up. My indicators think this might go down a little bit more, but I think it's going to be in this area here. And the lowest it has went in the last couple of months is about 22.44. So as long as it doesn't go any further than that. And this trade will expire on July 21st. What do you think of this trade? Will it go up, down? Will it stay in this range? Is risking $100 to make $100 a good enough risk reward? If it didn't trade this Iron Condor, which is basically a neutral play, which direction would you go in? Leave a comment below. So I guess what I showed you is that you can make money on a stock that's not so popular and trading within a range. It's important to do fundamental analysis to know what you're trading. You have to know what you're trading before you trade it. You just can't look at the chart. You have to know something about the company. And that's why I use a watch list of stock that I know and love. There's about 140 of them. At least I know their names. And then I did some technical analysis, and we did an option simulation to plan out our trade to execute Monday. Now, what will happen Monday? If Monday goes down a little bit, I'll move these lines down and reevaluate that option trade. But again, I think it's going to stay in this range, and I'm happy. And remember to do your own due diligence. Leave a comment below. Hey, but like and subscribe this video. I have more trade ideas on my Discord. We'll catch you on the flip. Like what you do.